Hey, welcome back to my channel. If you are new here, my name is Sarah Schultz. I am a realtor in the Northern Nevada market, serving Reno and the surrounding areas. And on today's video, I thought I would answer a question that may be on your mind if you are thinking about moving here or buying real estate anywhere, actually. And that is, should buyers wait for rates to drop before buying? And obviously, this is a multifaceted question with multifaceted answers. It's not a one-size-fits-all, but let's first start with what people are saying. Now, obviously, your mortgage interest rate is going to depend on your unique set of circumstances. Full disclosure, I'm not a lender. I am a realtor, but I work with lenders all day, every day. And I do check mortgage interest rates because it directly impacts my business. At the time of filming this video, we're sitting roughly at 6.75% for a conventional 30-year. It's going to depend on the specific property, your credit score, your debt to income ratio, your down payment amount. So don't quote me on that price. This is just an estimation. But what I am hearing from lenders in my market, industry leaders, finance professionals is that the next rate cut that we may see will come in January of 2026. And what I've heard, the number that I've heard thrown around, again, don't quote me, is that we may be seeing it drop down to around 6.125%. That's a significant drop in interest rates, which have a big impact on your monthly mortgage payment if you are paying for a home with a loan. Okay, let's talk about other things. In Reno, obviously, everywhere else nationwide, we saw a huge boom in the 2020-2021 market when COVID happened and rates were slashed to prevent a collapse, essentially. That drove prices up real quick, real fast. It was a hot seller's market. Things have cooled off since then. Many economists are predicting the following: modest price corrections in some neighborhoods between 1% and 3%, stabilization as interest rates settle and inventory rises. And then after the rate cuts that they are predicting happen, obviously this is all speculation, but experts are predicting that the demand will kind of come back around at that point in the later part of 2026, which would have an impact on the competition, which would then drive the prices back up. So there's like this lull right now. If you're thinking about buying, it might be a good time, but that's a whole other video for another time. Let's just say that if you're already a homeowner, the bad news is that the days of 10 to 15% annual appreciation are behind us for now. That's not to say they won't make a comeback, but the good news is if you already own a home, you probably are sitting on a fair amount of equity from all of that we just got through. But if you are thinking about buying, that probably isn't going to be your reality for a little bit of time. I have no way of knowing how long, but it's something to think about. Appreciation is going to slow at this juncture. So what I'm saying is that most projections are pointing to a plateau, not a crash, despite the drama that the newscasters love to bring to our lives. Headlines are going bananas with this. It's clickbait. Don't believe it. We're not crashing. We are plateauing, but we're not crashing. Especially in our market, in a place like Reno, where people are still relocating here for jobs, lifestyle, and for cost of living if you're coming from somewhere that's more expensive. So here's the thing, it's a common misconception that waiting is ultimately going to save you money, but you want to be really careful with that. On the surface, waiting sounds smart, right? Maybe prices will dip, maybe mortgage rates will come down a little bit further, right? Like, it's always a gamble. But let's break down what that actually means. If prices drop by 3% on a $600,000 house, that means that you'd be saving $18,000. The problem with that, though, is that if interest rates tick up, your monthly payment could actually end up significantly higher, and you would lose out on building equity during that entire time period. Here are some things that you need to consider: rising rents, inflation, the cost of moving twice and also potentially paying rent somewhere. That's money you're never going to see again. And the opportunity cost of waiting. So there is a cost associated with waiting. Like, it's not free to wait either. Unless you plan to just magically not live anywhere, not pay rent anywhere. And even then, there is like an inflation metric. You're going to be spending money wherever you are. So the key takeaway with all of what I just said is that timing the bottom is nearly impossible, and that you ultimately should buy or sell or do anything, really, when it's the right time for you. Here's some more realtor jargon for you. It's not timing the market, it is time in the market. But it's true. The longer you hold, the more appreciation you are going to see over the long haul. All right, I'm gonna move on. Let's talk about the cost of renting versus buying. And let me say before I get further into this, I'm not here to rent shame you. There are circumstances where it makes more financial sense to rent than it does to buy. And if that's what's going on with you, then that's great. Like, it's not my job to make judgment on you. That's not what I'm here for. I'm here to help you. But for the sake of this video, I'm going to continue. So we've got this family. They're spending $3,000 a month on rent. That equals $36,000 per year. Meanwhile, let's just say the market stays flat for the next 2 years. Let's say that we're not seeing any appreciation. That said, your mortgage payment is going to stay the same, right? Unless you're in an ARM or some like random loan product that was predetermined before you made the purchase. But meanwhile, your landlord can jack up rent if they feel like it. It's not a guarantee. And your landlord isn't just letting you live there for fun. They're letting you live there because it brings them passive income, somewhat passive, mostly passive income. That's what their goal is. So if you're paying a landlord, you can expect over a 3 to 5 year term, you're probably gonna see a rent increase. Whereas if you're paying a mortgage, that money is going to be the same payment every year for the next 30 years, arbitrary loan products not included. There are some scenarios where waiting does make sense, and I kind of touched on the fact that I'm not here to rent shame you, and there are some reasons why you may want to consider waiting. And here are some examples of those situations. Maybe you aren't 100% sure that you want to stay in Reno for the long term, or at least for 5 years. If that's the case, then yeah, I would say you should rent. And when you make the decision, if you make the decision to stay, then maybe at that point it can make sense to look at the market, look at your circumstances, and maybe connect with an agent and a lender and see what a purchase may look like. But if you're not really sold on Reno as an area, or not really sure about your job situation long term, then I would say that renting makes more sense. If you need more time to save more money for closing costs, or for an emergency fund, or for other financing things in your life, then of course, like, don't spend money that you shouldn't. I'm not advising you to do that by any means. Like, make sure that you are safe and secure and you have a safety net before you dive into homeownership, because once you are your own landlord, forget about calling someone else when a pipe bursts or the roof leaks, whatever. At that point, it all falls on you. Another reason might be just like major life stuff. Maybe you're thinking about having a baby. Maybe your marriage is on the fritz and you're thinking about getting a divorce. Maybe you are between jobs or thinking about making a career change or starting a business. These are all reasons where it may make more sense to rent till you get that sorted out. Even if you do decide that waiting is in your best interest, there are things that you should and could be doing to make yourself a more worthy buyer if and when the time comes. One would be reviewing your credit scores, brushing all of that up, making sure that your credit is as high as it can be, because when you do go to take out a loan on a home, they are going to pull your credit. You're going to want to save aggressively. And one trick that a lot of people use is actually making a mortgage payment in like a savings account each month. So if you're in a rental and you know your mortgage payment would be a little bit higher, you can pay the difference each month and just pay that difference into a high yield savings product of some kind of savings account. And that way, you're not only building up your savings, but you're also getting yourself into the routine of paying what you think your mortgage payment may be each and every month, so that when you transition from renting to buying, it doesn't come as a shock if your mortgage payment is a bit higher than your rent. And that leads me to, if you don't know what you can afford, or you'd like to know what you can afford, you should definitely connect with a lender. I have awesome lending partners I can connect you with, who are tried and true professionals in our market, who I know get the job done, who aren't salesy, spammy, pressuring. They're not gonna do any of that. They're just gonna help you put together a game plan. And a lot of people get really defensive, and I've been talking about this a lot lately, about how a lot of buyers come to me and they start out with an apology. I'm not really ready. I don't wanna waste your time, or I'm probably not your ideal client because I don't plan to buy for like a year, 2 years, 5 years. I'm just seeing what might be out there, right? No. Please don't apologize. You are the ideal person that I want to talk to, because that means that before you jump in and make a bunch of silly mistakes that could have been prevented, we can get you, in line and get a plan in order so that when the time comes, you are ready. And yes, that does mean connecting with a lender who can go over all of your options, kind of give you some target numbers for your credit score. Maybe they say that you need to improve your credit score, and we have resources to help you, like a credit repair professional, or maybe you are X amount short for what kind of down payment and closing costs you'd be looking at. So they'll give you that number, that target, and maybe we have kind of a ballpark idea of price range. So this is what your monthly payment may look like given the current market conditions. At least you can start budgeting. Like if you're just walking in blindly and have no idea, like you are at a disadvantage. So take advantage of people who are ready and willing to help you, even if you're not ready and willing to buy. If you are leaning towards buying this year or in the next year, here are some things that you should consider doing. If I were buying, and I recently did buy actually in the last 6 months, I would be shopping below my budget, right? If your lender says you're pre-approved at X amount, shop below that so that you have a buffer. It also gives you some leverage if you get into some tough negotiations or a bidding war emerges or any number of things. Like, don't just spend what you're told you can spend, right? Try to go a little bit below that so you have a bit of a buffer. Negotiate for seller credits to buy down your interest rate, help with repair costs, or anything else that you may need, closing costs. All of that could potentially be on the table, especially given the market shift that we are in the midst of. Take due diligence very seriously. If you guys don't know this about me, my dad is a retired home inspector. He worked for several private companies. Then he went on to work for the city, and then the state, and then he actually ended up working for FEMA. So I take due diligence beyond seriously. I'm super picky about who I recommend for home inspections, etc. We're definitely going to have all that handled. I facilitate all of that for my clients, but definitely don't skimp out on any of that. And when you do make a purchase, just try to aim for something that you know you can hold for the long term. I'd say at least like 5 years, just to make sure that you are seeing a decent ROI, given that the market is kind of turbulent, fluctuating right now. We don't really know what's going to happen. Growth at this moment has kind of plateaued. We don't know. That could change. Experts are thinking at the end of next year it's going to shift again. But regardless, just make sure that what you buy, you're going to be comfortable holding on to for a longer term. All right, I hope this helps you out. I hope you found this informative. If you have any questions about relocating to Reno or real estate in general, I'm your girl. You can book a free call with me. There's a link to do that in the show notes below. It's no obligation. Just a chance to connect, see if we might be a good fit to work together, and at the very least, help you strategize your next and best steps. I also have amazing referral partners nationwide. So if you're not in our market and you're thinking about making a move elsewhere, you can still reach out and I'll get you set up with the right individual. And also, if you're thinking of relocating here, but you have a home to sell wherever you're coming from, I can help you out with that as well. So go ahead and book that call with me regardless. And if you haven't already, it would mean the world if you would smash the like and that subscribe button. I put out new videos each week about the Northern Nevada lifestyle, the Reno Sparks housing market, and of course, all things to do with buying and selling real estate. Thank you guys so much for watching, and I'll see you next week.